some employees might be wondering since when did Jupiter have a CEO, and whether, Jiten would be arriving in a spaceship. Yes. So Jupiter is one of the hottest neobanks in India, and I myself have been very curious about neobanks. So I'll love to hear Jiten's insight about neobanks. And Jiten and I have known each other for about 6 to 7 years, being in the startup ecosystem, and I've always been impressed by him. First Citrus Pay, then at PayU he did Lazy Pay as well, which is one of the foremost BNPL ventures, and now Jupiter, which is an exciting venture as well. And he exited to PayU for about over $150 million, which was one of the most significant exits at that time. And he has raised, almost $150 million for Jupiter as well. I think most well-funded neobank in India. Would love to start, with some of the questions.
Sure, go ahead.
So, how did you decide to work on a neobanking venture, given the situation in India? I know it's, we have a lot of problems with all these banks, but on the other side, we have a very strict regulatory framework as well. So, would love to hear about your, journey from, how you started, what's the, neobank about?
Sure. So, like as Krish also said that I worked in payments. That was like way back in 2011 when I don't think there was a fintech as a word existed. So we literally heard the fintech word first time in 2014, and that's how we started calling ourselves as fintech. But having done payments and then the lending through Lazy Pay within the PayU umbrella we did. One big realization was after like 9-10 years of the startup world that I think being in fintech, when I zoom out, not a single fintech ever disrupted any bank in India. And that's a reality I learned after 10 years in startup world and calling ourselves cool fintech and all of that. So I said, if this is the reality, let's sort of extract out why. And when I look at especially the consumer side fintechs, generally the consumer side fintechs are mostly transactional. So let's say there are payments apps. So every time you make a payment, you try to optimize GPay, PhonePe, Paytm, XYZ. Or when there are lending apps, so whenever you take a loan, you try to optimize either for interest rate or for faster delivery of loan. But when it comes to bank, you don't optimize every day for every interaction. So, hello? Yeah. So you don't optimize your interactions with your bank. So your habits are being set. So let's say if you're ICICI user, even though you're not happy, like you, every time you feel the bank can do better for you, but you still don't leave. You still don't leave the relationship. So, and I think that happens because there is an inherent trust, and it's a trust relationship which you have with your bank. And once you are able to create that relationship with the customer, then virtually you can actually create any business, in my view. And I think that is the insight I got after 10 years, late, but not too late, considering I was still 40. So I think this led me to think that if you're to really create a large financial services franchise in India in the next 20 years, then you got to have the trust relationship. And I think now the choice was you apply for the banking license, like the way a couple of other entrepreneurs also tried applying, wait for 2, 3, 4 years with uncertainty. Or the second choice was partner with the bank. Yes, there are shortcomings, and I'll explain the challenges also which we went through. Partner with the bank, get the product market fit, get the customer love, create the trust in the brand, and then is when you go for the license. So I think that was the thinking. And fast forward, when I sort of look back the journey, so we started the company in September 19, and it's been 3 years. Took us like longest time in launching any product, 16, 17 months. So before we could launch the product, took us like 16 months in lab. So, but we have now like 2 million consumers, growing really well. We do like more than $200 million worth of payments every month. The customers, like organically, we are like 50% organic acquisition, so we don't incur CAC. Now all of that is happening because of just one thing. We are focusing heavily on service, creating the trust with the customer. And I think that is what really working well for us. So, but in nutshell, to answer your question, I wanted to move away from a pure transaction to a trust with the consumer. And that was the reason for the banking startup.
Great, thanks. So I have some more questions to go deeper.
Sure.
So, what kind of challenges do you face? Regulatory, fundraising, customer acquisition. You already spoke a little bit about, but we would love to hear more.
Sure.
And any others.
So I'll tell you a real story. So I think for this startup the fundraising was the easiest. So literally the fundraising happened literally, I'm telling you, in like 30 minutes. So, and it was not crazy time, by the way. Crazy time was last year.
That's because of you, I guess.
So 2019 we raised, and so I left. I still remember 30th June 2019 was my last day at PayU. 1st July I met one investor who's in our cap table, and literally in that lunch meeting itself he gave me the term sheet, and I'm like, I don't have the company formed yet, and so he said, no worries, I'll write Jitendra Gupta. So that's how it just got started. And so otherwise my plan was to wait for 6 months, chill out a bit, and then start incorporating a company and then take a break and all of that. But I think what tends to happen is when there's a term sheet in your hand, and then you're like, boss, let's get on to the treadmill. So literally it happened that way. Otherwise, I think everything would have been at least 6 to 9 months later, as per the original plan. So funding was easy. Then we went to few banks. So, and so like by the time I think everybody in the ecosystem knew about me. So it was easier to connect with most of the bank CEOs, and I called few and got the meeting, and they were like, oh, you work with us. So we partnered with one of the top 3 banks, private banks, without naming them, and literally we did a handshake with the CEO, and I was like, wow, this is going like really easy. Everything is going easy. So like got the funding in 30 minutes, closed the bank deal in 30 minutes. Like how can that be happening? So we were like very exuberant. I started hiring, and so and I was lucky, I would say, in hiring as well. So in the first 3 months, we were able to fill our leadership team. It doesn't happen so often, right? So everything worked perfectly. And then the reality started. Reality started in the sense the banks, after the CEO communicated the message down, the teams were like, oh, why are we doing this? We don't know. There's a diktat from the CEO. They said we have to cooperate with you. And then they started sort of making fuss around the processes and compliances, and then they started giving us APIs which never worked. So it took us like a year. And after a year, when I took a stock, I realized we did not move anywhere. And by the time we had like 70 people in the company with high hopes on me, uh, and I started getting questions from people that where are we ever going to launch the product? The morale was down. So think like from that exuberance, like everything works, whatever I do, from to nothing is working. So And I'm like, boss, this is the time to take a stock take. I actually, then I reached out Federal Bank, and I met Sham and Shalini, and I said, I want to work with you guys, and this is the proposition. To their credit, they said, we don't have anything, but whatever you tell, we'll build. You help us build, and that's how we got started. So the good part was, see, in most of the private bank, there is this feeling that we know everything, we can do everything. Unfortunately, they don't have anything. Here, at least, the management was practical to admit that we don't have anything, you help us, and we'll tread this journey together. So it took us another 7, 8 months to get going, but ultimately, the decision of changing the bank after 12 months. So, like this whole sunk cost fallacy, right? Like my whole team was, especially my engineering team, was not convinced with my decision of shelving out everything what we built in last 12 months. And I said, let's start fresh. Uh, Fortunately, we had spent like just like 2.5, $3 million only so far. So we're lucky that way. Out of the 25 million we raised as the first round, so we had most of the money in the bank. But we said, let's shelve everything, let's get going with this. Took another 8 months. So yeah, it was a very painful journey, and I think the life teaches you humility. It's sort of from like it doesn't matter in startup world what your past was. Your every journey is unique. Every journey is different. So and you got to do same amount of hard work, maybe more, maybe because people's expectations are higher. So you got to do work more harder and to make it work. So I think that was the like one of the challenge which like in the Jupiter journey, which is as recent as like 18 months back, which we had. So really from there, I think the things started working. Life has been good in the last 18 months. So yeah, but so more relieved now. But there was no joy. So because all the joy was taken away in first 12 months. So it is more of a relief feel.
I think that's what working with banks do, right? And we were very well aware of it. So can you talk a little bit about the customer acquisition as well? You said 50% is organic. We would love to understand, know more about it, how you have
Sure.
been able to achieve it.
So I think, as I said, like we had plenty of time and teams in the first 12 months. So we said that how do we keep teams busy? Well, we hired everyone. We had hired marketing, we had hired community, we had hired like engineering folks, product folks. So we said, well, how do we keep them busy now? There's nothing in real. So that's how we actually created a community, online community, where we said that let's start engaging with people, understanding what they want from a new age bank, understand what their pain points are, what their expectations are. So I aligned my product and marketing folks to manage that. So they were full time doing this community building. We started making financial education content. So like if you look at our YouTube or Instagram channels, they're flooded with such things, and a lot of followers got created. So literally when Jupiter brand got launched, the product got launched, we had like 150,000 users who were waiting to open the bank account. Can you believe that?
Amazing.
So, like a commodity product where users are getting in the queue. You don't need to. You can go to the branch and open the account, or you can open Kotak 811 account also. But the buzz, the brand, the community, the financial education, the engagement which we created really made the brand cooler, made the brand more relatable, and created an aspiration. I think brand is all about aspiration. Like it is not about many a times, if you ask me. Like, and I think there's a classic example of Apple branding, right? Where Apple brand, if you clearly look at their ads and all of that, they rarely talk about the products they talk about the emotion which is like think different. So now think different is no meaning to Apple product, right? But that is the emotion they evoke. And I think this is what, from a Jupiter side, we evoke the emotion that there is this a new age bank which truly get built by you, by your needs, by the way you want to interact with the bank. So that is the emotion we evoked. So that's why even though our product which we launched was like what you see today and what we launched 15, 16, 17 months back is like just 20% of what you see today. But still we had like long queue. And then it was an internal challenge to accept 150,000 users because we were not ready. So we started accepting like 1,000 users. Now that created more FOMO. So people were writing to me as a favor, oh, can you allow me the access? They were reaching out to through friends, hey, can you ask Jiten to allow me the access? So it just, so without we doing any conscious effort, it started going viral. That was very difficult to get a Jupiter account. So I think, so that just like, are like the first 300K user came at a zero CAC. So we didn't have to spend anything. So I think that it's just word of mouth. And of course, we focused heavily on service. I'm not sure we are perfect yet. We have lots of work to do, but I think one of the things we are very sure that this is one aspect which is a hard work, but you have to do it right because consumers are keeping their money with you. So you can't behave like any other bank. Where they're saying, okay, raise your ticket, I'll come to you in 72 hours. We are like everything has to be instant at the moment resolution. So that is the way we can create more trust because they are not seeing us physically. They are not seeing our building. So that's what is important to create trust.
Great, great insights. And while you touched upon the community, how did you use the leverage the community to build your product, the features? Can you share some examples
Yeah,
which you would
sure.
have not done otherwise?
Sure. So, so what we did is at every stage, what we did is like even though when we were writing product specs, emitting Figma files, we were selecting the cohort from the community and showing to them, ki, this is the product we are building or we intend to build. What is your take? Does this meet your expectation? What would you like to see different? Uh, and then when we had the first level, even the developer has tested the product but not ready for external release, we used to give it to the community users first so that they get real feel that I'm contributing. So I think those are the things we did. So like the many ideas, like what you see in the product, I would say half of the ideas came from community. So it is not our product manager's brilliance. So the community guys gave us those ideas and feedbacks and nuances that it should be this way, it should be that way. They still give us, like our community is now more than 10,000 users, very active.
Wow.
Online, if you go, it's open
Yeah,
for
I've seen
anyone.
that. Yeah.
Yeah, so very, very active community. And people roger us also for what we don't do right, but that's okay. But because we get a first-hand feedback, otherwise, where is the time to get first-hand feedback? You have to hire user research guys, they'll meet 100 people, and then they will get the report. So it's all lagged thing. Here we get like real time, whatever we are releasing. So and so today our release cycle also works this way, where we release first to employees for 1 week, then it goes to community only. So our community user cohorts are separate. So it gets released only to them for 1 week. We get all the bashing back from them, and then it goes to the external public. So it's a very defined release cycles. So that's how I think when product goes out in the market, is much more, I would say, lesser bugs, if not bug free, but lesser bugs and much more evolved or polished compared to any other company when they launched the product first time.
That's great. I think that's a dream product for the user, right? If you can influence the product and that to a banking product,
Yeah.
not a t-shirt really, right? So do you also face the challenges where people expect the whole suite of services like they do from a bank, credit card, lending probably already thinking about it, investing you've already started.
Yeah.
But other areas that other services that banks offer.
Yeah. So this is one place where the users give us a lot of feedback, saying that for me to make you a primary account, you need to give me all three services, which is the deposit, lending, plus credit card and investments. So you need to give me all three. Otherwise, I can't use you as a primary account. I'll use you only for one of the service and all of that. So we get this lot of pressure back. Like credit card right now is the highest demanded product from our users. So like every week we must be get like out of our customer service the queries or call center or chat center, if there are 100 queries, the 30 are for the new products. So that's how we get it. So I think there's a real high demand of. So we also use this as a signal in terms of prioritizing our effort. So it works. And we clarify to users not everything is possible instantly. So then there are other ways to keep them engaged, and we like ask them feedback about our existing features. Uh, we in fact selectively pick up few features out of turn just to make power users happy. So very small nuggets, and we do that for them. And so like even like if any new product has to be named, we first go to community. I think suggest the name. Now and we pick up the name, award the community member in public domain, and it just keeps getting talking on all of that. So like recently we launched like a metal card quest. So like we want to give 10 metal cards, and so we launched a contest. The community users are discussing, I've got this moon, I've got that moon, and I have a higher chance of running metal card. So now they only are tweeting on social media and like putting on LinkedIn and all of that. So I think I would say our product marketing teams are lucky that they have to do less work because there are so many evangelists of our products. So it really helps.
Great. Those are great insights. So what kind of opportunities do you see, for neobanks going into the future, mid to long term?
It's a tough question. So the reason I say so is tough. Frankly, I think there are a lot of regulatory uncertainties in the area which we operate in. Uh, the there are no guidelines. It's an unregulated space, and in today's world, wherever there is an unregulated space, there is a high risk. So, so that being said, I would say that our regulator and the government have come long way in last 2.5 years. So I still remember when I started the business, I presented to RBI that this will be my model and this is how I want to do. The first response was not very encouraging. And it was like we are not sure whether India needs such thing. So that was the first response from a very senior guy in RBI. It was a formal meeting. Uh, we went ahead and all of that still. And now when I meet regulators, I think I see at least a receptiveness, positive receptiveness. The hearers, the listeners, they sort of want to understand more. So there is a good engagement. So I think at least my expectation is that in next 2, 3, 4 years, whenever the right time is, as per the regulator, we will see a new licensing regime. And like we saw some traction from Niti Aayog, where they published a paper, they invited public comments, they published a final report saying that India really is ready for digital banking licensing regime. So being a vested party in this business, I'm also hoping this to come.
Definitely. Great. So in terms of, partnership models, what kind of partnership models are prevalent in India? Generally, partnership models range from a full stack service where, you just plug in and bank will offer all the services, including risk, fraud, etc. Whereas on the other side, they might offer just a kind of a more of a book, and you build everything either yourself or through a BaaS player. So what kind of
Sure.
models are prevalent? I know BaaS is players are not,
Yeah,
really.
in liability side of the business, there are no BaaS models today. So we had to do the heavy lifting ourselves. So banks, core banking, we still have to use because this is the centralized system for settlements and all of that. But other than that, everything is built out by us. So we have built like literally everything ground up other than the core banking where we have to connect with the bank. So we in fact don't use bank switch or bank debit card system. We don't use any of those. But it's a massive job to pull that out. It's like taking one part of the heart out. But we managed to pull that off. Uh, that's why it took longer time. But we have more control on the service and the process. So, yeah, so, and in liabilities, like bank is a licensed entity, so we can never touch the money because it's a customer's fund reside with the bank. So the authentication of the fund debit also has to happen with the bank. So there is a very fine balance you have to strike when designing the experiences in terms of where customer feels native, but at the same time from a security standpoint, the funds move only when customer is directly authenticated with the bank. So I think those are the nuances we have to address literally in every API, day in, day out, and all of that. Now, when it comes to lending, we haven't started yet. We just started very pilots just now, literally like a month back. So we have got our own NBFC in place. So we'll be using that to do. For credit card, you have to work with bank. So we'll be using the bank's book. It'll be a co-brand card anyway. So we can have some benefit from the bank in the cost of funds because we raise liabilities for them. So I think that's the idea.
Got it. Great. And can you also talk about the revenue models or the
Yeah, so
streams?
the revenue models are almost similar to what a bank's revenue model is, which is the NIM, the net interest margin. So I think while regulatorily it's not allowed to get a share of float by RBI, and I think we were not keen as well because we are like it's not like become very large revenue business. So so we make revenues primarily through three things. One, the interchange fee. So today we issue debit cards and there's an interchange fee around that which we get. There is some amount of fees which we charge to the consumers through the bank, which we get, and and the third is the interest income. So interest income on the lending, and this is where bank gives us benefit in terms of cost of funds. So that we are able to leverage for the lending business. So that's how it works out.
Got it. So I think we have covered most of the, interesting insights about neobanks, but would love to, talk about your BNPL ventures. So you founded LazyPay, and with Jupiter also you have Jupiter Edge. So, I think we would love to learn more about how do you, underwrite customers just with a phone number, and also, how does how do revenue models work for BNPL because
Sure.
you are not charging a fee at all.
Right. So I think it was a very interesting story when we started Lazy Pay. So during my citrus days, we realized that like whatever you do with with the merchants, there always whenever we went to meet merchant, there was this complaint about success rate or transactions dropping and conversions affecting and all of that. And I started thinking that what to do. Like we had done our best, there was no scope. Our users were dropping. What could I do? And then I started looking at the behavioral aspect of the users, and I realized that the purchase process online, if you look at it, how it works is you add to the cart, you make the purchase, and you make the payment, and then the purchase gets completed. So it's a purchase and payment are like tied together. And I started thinking, what if I separate these two? So purchase gets completed when you say buy, done, no payment. And so that was the original idea of solving that problem of pay later. That terminology never existed in India, by the way. So we introduced that term to India. So, so that was the original idea. We wanted to increase the conversion rates. So we launched that, but then we realized it means I have to underwrite the consumer. I'm taking risk. Well, merchant said, was you are separating it. I need my payment tomorrow. So, so he said, oh, you need your payment tomorrow. That means I need to collect from the consumers. I need to. So because I thought merchant will take the risk. So that was the idea. But merchants, they wanted conversions, but not risk. So, and this is where we said, now we need to underwrite, we need to collect, we need to service. So it's a whole gamut of things opened up. So we went back to merchants and we said, okay, if we are doing this job, I need more data because you know more about this consumer. So more data about shopping history when that consumer is clicking our option, more data about like what login is it doing, the guest login or the check the logged in part, cart value, or if you can give some indicator around what category of item person is ordering. So we started getting real time, literally, I think 10, 12 variables like this whenever the cart was being created. And so we had from merchants 30 milliseconds to give the decision. So we said that now we have got, because we bureau we could not ping. That was because we were not a regulated entity and customer is not applying for loan. So no way I could ping bureau and the customer is not doing KYC. So so effectively just the phone number is the identifier which you're using to basis the real time variable coming in. We went down to the levels of uh, what phone, prepaid, postpaid, and we identified like this network, prepaid, this circle,
Tenure.
this circle, we identified doesn't work or works. So we had like whole set of data created, literally at a pin code level. Okay, what works from that particular pin code, from particular network, prepaid, postpaid. So because that was the only way to go down, because there's no other data available.
Were you trying to use any databases like
No, no,
Truecaller, etc.?
we never used those. So it was all internal. So and then lot of like the time taken in clicking card to this. So all of those analysis,
Wow.
we created like a very good amount of models around those. It was tough in the sense the first 3 months of delinquency was 19%. So and uh, and by the time I had sold the business, so PayU said shut down, literally. There's no discussion. So they said shut down this product. We can't afford. And then I asked like 4 months time frame from Naspers, and I said like, give me 4 months, and I'll meet two metrics. One, I'll grow the volume 3x. I'll bring the loss rate to 4%. And I think literally like every 2 weeks we were churning a new model, and we reached to that. So we our loss rate after 4 months reached like 3.5, and volume was also 3x. So I think, and from there on, no looking back. But it was not easy. I think though I have to give credit to one particular guy who helped me in this journey. So I knew head of risk at Klarna. So fortunately he left at that time. So I hired him as a consultant, and he came to India for 2 months. He worked with me in just creating all the infrastructure and risk models and all of that. That was the game changer for me. So that learning was unique. It's like I fast forwarded my learning by 10 years. So I think that was really helpful.
Great story. And how about the revenue streams? Are these,
Fortunately, you know, the so merchant was paying us MDR 1.5%. Then there was some late fee angle. So 25% of the customers were paying late. So overall on a portfolio level, 2% it was coming out to be. So 3.5% on any transaction. So my idea was basically, as far as my loss rate is below 3.5%, the loss plus collection cost,
yeah.
which is the payment gateway cost, I'm okay to run and break even. Though the reality is, we ended up at a loss rate of 2% when I left. Our revenue was still 3.5%, and our collection cost was 0.5, 0.4%. And then the magic started, which is that now by the time we had like 1.5 million consumers, is that now let's give personal loans to few of these. So we started doing that, and like within the very first month, we gave I think 22 crores of loans, uh, and with the delinquency which was like unprecedented. So I think because we are giving only to the existing consumers who were with us for a certain vintage and all of that. So I think that was like zero CAC. The cost of fund, because of PayU vintage, we were able to negotiate at like 8.5%. So I'm giving it 18. So it was a very good margin we were able to make. So revenue was like very clear.
Great. What are some of the interesting learnings from these BNPL ventures?
I the learning is that frauds are high, so you got to have a very sophisticated fraud models, and and you got to monitor it every day. It's not a never a post facto. So never post facto that I'll look at the end of the cycle or end of the month. Doesn't work. By the time you will be wiped off. So so I think the most amount of work which we did was in the fraud side. And I think what people do mistake, most of the credit guys in India at least I've seen, I think they mix fraud and credit risk in their modeling. And I think that is a disaster in my view. Uh, so, so this is what one of the learning from Klarna was. So fraud models we invested heavily, credit risk model we invested separately heavily, but I think at the fraud level itself you see 80% bad actors going out. So that itself is a good way of managing in a separated way. And your agility also you get faster in terms of deploying anything new and doing anything new, not depending on the guy for credit risk and then you're doing back testing for a week. And so I think all of those things really worked out.
Can you share some details about what kind of fraud,
It was
prevention you
too
did?
much. So I think, as I said, like we were able to identify the pin code wise behavioral analysis. We were able to record the shopping data of the users by phone number, or able to map users how many phone numbers particular user uses. So we were able to do all of that. So that really helped us really pinpoint exactly this is the user, this is his behavior. So I'll give you only one example. So we thought that we have done so much of work, let's expose it to others. So we actually tied up with Bajaj Finance, and Bajaj we started giving this data. Bajaj was paying us like, so they were pinging whoever coming them to them for the loan, for that store purchase loan, right? And we were getting revenues of like 3.5 crores a year from just from that service. Now I believe, I think I met someone in PayU and they were telling me that that business line itself is now 45 crore business line, pure bottom line. So I think Of course, teams evolved further and there's a lot more sophistication. But I think the whole idea of uh, identifying the consumer right and getting to know the consumer's behavior, uh, because it was less of a credit risk issue in my view. It is more of an intent issue because consumer feel there is no fear. So yeah, so this is another insight I'll give you. So we, in the first 12 months, we used to call the consumers heavily, not manually. So we had like procured some 250, 300 auto dialer lines, and we like some, as I said, it was never a credit risk issue. It was more of an intent issue. Like nobody wants to default for 5,000 rupees or 10,000 rupees, right? And so he said this guy has to get it right. Uh, Without we getting intrusive. So we used to call, like we had the logic set up again at the back end, that call from one number this time, and then the guy doesn't pick up, call another number, the guy cuts, call third number. So people keep blocking, right, when you collect. So how many times you will block? So, and we used to change our numbers every month. So like every month 250, 300 new numbers procured. So so they got this feeling that these guys will not leave me if I don't pay them, because see, we could not afford manual collection. Because it was so expensive to collect 10,000 bucks or 5,000 bucks. So we never hired manual agency or never had a manual calling. So but this whole auto dialer strategy, where like the customers at the end, like many good customers also left us because of that, because they said, boss, I forgot 5 days and you harassed me by calling 200 times. So I don't want to use such product. So yeah, so then we evolved after that, like which set of customers not to call through auto dialer again and again, and send only soft messages. But I think that whole strategy really worked.
Yeah, collection is key, definitely.
Yeah. So there was a fear that these guys don't leave their money.
But you never reported to the bureaus.
No, we never reported to bureau. It was not like there was no model.
Are there any changes in guidelines now?
Yeah, I'm sure. So nowadays, like I know every bureau wants to at least get the data. I don't know what they do about it.
They sell it, right?
But at least they want to get this data. Whoever are defaulting and all of that.
Got it. Could you share some instances from your background where you faced adversity and how you handled them?
I think I shared already. Like the Jupiter was a big adversity, but I think we had a fair share of these things even in the citrus journey. So I started citrus in 2011, and again the idea at that point of the online payments market was like very small, uh, but I was like clearly inspired by Brazil and China. So where the online payments have started picking up really well, and I'm like in India, next 5 6 years this is gonna pick up. That was the hypothesis. I had no hypothesis around how I'll be different and how my product will be better. That was not the hypothesis. The hypothesis was just the market. Uh, so as I will flow with the market, what happened? So 2011 we started, till 2012 end, the market didn't pick up. So we had a board meeting. I remember in 2012 December, where it was decided that we'll see next 4 months. If we don't reach a certain volume, we shut down the company. So, and I think to my luck, uh, certainly the market started showing positive behavior. So there were a lot of these e-commerce sites, 70mm, Yebi.com or Yep.com, then kitni sari, like hundreds of sites popped up in next 6 months. And all of them started churning good volume. Like BeStylish.com, FashionandYou.com,
Let's buy.
बहुत सारी those
Let's
time
buy,
पे, right?
yeah.
So we met our goals, and so we survived. And after that, we're not looking back. Actually, every quarter we were like two and a half times of the previous quarter. So, like give a real revenue trajectory. So in the citrus journey, the first 1 year revenue was 1 crore, second year was 2 crore, third year was 12, fourth year was 55, fifth year was 90, which is when I sold. So, but literally it was like this.
Hockey stick.
Yeah, but the first 2 years were tough, very tough. And this is where I think if that quarter would not have worked out, the next 3 4 months, I think you would have shut down. There was no citrus you must have heard of.
Got it. Great. It's, I think entrepreneurs face real, risks and
I think one of the learning has been stay put longer. That is the only way to build a sort of a bulletproof business.
definitely, I guess.
Because your decisions will also be impacted by that. When you have this mentality of stay put longer, your decisions will be impacted in terms of, oh, I'm not taking any crazy decision which can shut the company next 1 month. And you take long term decisions. You sort of try to do things which are more sustainable. I think that matters.
Yeah, great insight. How do you drive your employees to be entrepreneurial, have bias for action, take ownership?
So it's the pros and cons both. So, so, so the reason I say so, like in Citrus, if you look at it, there are like almost 20 startups started out of our teams. Even in Jupiter, which is just 2.5 year old, the 6 companies got formed in last 1 year, and all of them are funded now. Uh, but I think so the pros is that you invariably try to hire a great talent. You try to hire self-motivated people. Uh, and at least my operating style is give like full autonomy. And so you start with 100% trust of autonomy, where people are able to take their own decisions, drive the decisions themselves, own the mistake as well. Uh, but then you start from that level and say that, okay, whether this person needs more guidance or the person is not confident in taking decisions, and then you start reducing autonomy. Uh, but day one you start. So now the cons is not every, not every team member is tuned to that style. So we see many people coming to me saying that I'm burnt out. Though I feel it funny, frankly, when somebody, especially below 30, tells me I'm burnt out. Because I remember when I was like below 30, I used to work like all 7 days. So, so I think, but I think this is where like how much pressure people are able to handle. So we pressure test first 100 days, almost everyone. We pressure test like what kind of pressure the person can take or not take, and basically that adjust role, adjust responsibility, and all of that. And I think some people really thrive in that environment. So those are the guys who effectively become entrepreneurs. Some people who don't thrive doesn't mean they're bad, but they're not made for entrepreneurship. I think that is the difference.
For the other ones, you prepare check already, I guess.
Yeah, of course. It becomes a natural choice, right?
Great. But do you also try to inculcate, some traits of entrepreneurs, if not all?
I think entrepreneurship, if you ask me, is that more of like continuously making decision making, basically making decisions every day, making decisions about short term, long term, balancing out, right? And I think if you learn that, because many decisions you will take basis the gut instinct, right? It's like a it's like a poker, yeah. So I play poker a lot, and like you have two cards in hands, like five to open. You don't know what's gonna open. You still bet, right? I mean that's how the entrepreneurship is. So many things will be unknown. So but you still have to take calls, which are measured calls, not blind calls. And how many times you're able to take right calls is where you get successful or not successful.
Great. So what are your views on co-lending? Are you planning to, co-lend when you start lending?
Oh, definitely. Why would we not?
Great. I think we have the
I mean, nobody
co-lending
wants to
partnership team
use their
here.
balance sheet fully, right?
Great. So just one last question from me, and then we'll open up, other people who have questions. What do you look for in entrepreneurs, when you are investing in them?
I think couple of things. So one, of course, the market opportunity which the person is going after, whether that market opportunity exists in very large or not. If it is very niche, I generally tend to avoid, because I feel in the niche opportunity, uh, generally only one or two people succeed, and you don't know. Well, I'm not good at it because I don't know every domain. So the market opportunity has to be really large. Second, the person has to be very thorough with his work. So when they pitch, I actually try to get into the details of like what I've thought about domain and how they're going to make difference, and whether they whether they can also survive the basically the resilience testing. And third is, generally I'm a little biased towards people who come through a good reference. So and what reference means, so let's say one of the UB employees starting, let's say, uh, is the UB founder or the CTO or the CPO giving good reference about that person. And I do check, by the way, if any such person comes from any company, I call the founder to ask. And the better test is whether the founder is investing or not, right? So I think that is how it works. Otherwise, though, it's also a blind bet. Like, you don't know what's going to work. So so effectively, it's all about the person, but the person's ability to survive the odds. Because models will change, models will evolve, uh, but uh, but the market opportunity is large, and the person is resilient, and like thorough with his work. So I think detail oriented, not so I don't like just visionary people. So I actually prefer who are very good in execution. So those are the people I tend to fund.
Got it. Yeah. Great. Thanks for sharing those.
Sure.
I will open up to the. Oh wow, we have a lot of questions. Krish, you want to go first?
So, one of the things, Jitendra, one question we had is that, okay, obviously, Jupiter had the journey till now, but as India is chasing towards becoming the billion-dollar economy, and some interesting things are coming along, right? Like, one in particular, which I wanted to get your thoughts on, is the CBDC, the
Yeah.
central bank digital currency. And we have had some internal debates, like, this seems like a game changer, but we don't know how. So, can you share some light on that?
Sure. So we are also evaluating, to be honest. But I think what I've understood from RBI folks is, because there is a lot of confusion that if UPI is there and how is this different and all of that. I think the fundamentally one thing which has to be understood is, this is like cash. So this is real currency. This is not like UPI. UPI is what? UPI is a means to use your currency, but this is the currency. So I think this fundamental difference has to be understood to know what could change. So I think that is the second aspect is, the real cash is animosity in terms of who holds it, for how long and all of that. CBDC is also designed to a great extent to have animosity. So literally the trail of the money may not be available easily or freely. So I think that is the second key aspect. So now, the way I see that, wherever you're moving cash, uh, or because it will be stored in your phone device, so it will be like a cold wallet. So real device will be stored. There will be some key and all of that. So not on the network. So you have to think that what are those use cases which could come up effectively. So think like an offline payment. So this is an offline payment effectively. So, in my view, the biggest use case which will get solved, at least as a first read, is the international money transfer, because that is the real problem today in the electronic cash. So I think the other countries are also coming out with the CBDC framework, and once they connect to each other, how the settlement happens,
There's
real.
no settlement here.
There effectively there's no settlement, right? You have a pegged value, and then that value gets just adjusted. So I think that is the one use case which I can think of, which will go really big. I don't know others, frankly, it's still evolving.
I was asking more like, given that you are a neobank, I'm assuming like okay, most of the most interesting use cases perhaps you guys will.
I don't know, frankly, we have been engaging with RBI. Even those folks are not having many views in terms of ideas. So they also say, oh, you come with ideas, we'll experiment. So I think a little hazy right now, all said and done. Yeah.
Hi, Jitin. So I'm from the product marketing team at UB. So I've been following Jupiter since its inception because I had a couple of people who I know who work there and used to work there. So I remember when Jupiter was doing its beta testing. I remember my friend who used to work at Jupiter had sent me a mail saying that if you become a beta user, you can become a beta user. And I remember I tested the product and you guys had sent me
It's a
hamper.
box, yeah.
Yeah, and that was an aha moment for me.
Nice.
So I wanted to know that was this done only through word of mouth? That's the first part of my question. And the second part is you said in your customer acquisition question that you have been having, you had about 300K users who have lined up. So before this, I have worked with a similar company, I think Win12, where they had experienced something like that, but that was only through social media that they created the buzz. So the second part of the question is, how were you able to create the buzz? Because only through word of mouth, it becomes a bit.
No, so the content was the key, right? So we created a lot of content on the videos, and like we in fact did these kind of events as well, where I invited like a Monzo CEO, I invited like a new bank founder, I invited Nitin from Zerodha. So and we did it like open to all, live, and on those sessions, like 1,000, 1,200 people were joining at any point of time, and then those videos also we people were sort of watching, knowing about our brand and all of that. So I would say that there were a lot of aspects which played in creating that word of mouth thing. The second thing which really played, so when we started the whole waitlist creation thing, we used, and we were actually again were the first one in India to use that concept of like you're the waitlist, you want to jump the queue, you refer 5 friends. So now I see quite a few companies use that. But when we used it, so generally that also brought the network effect. So like each guy was bringing 10. So like I remember almost like we had like 5,000 users who brought 10 users. Uh, uh, or like there were like few users who brought like 300 users.
Geometric progression.
Yeah, so it was like literally like that. So that's how the word of mouth got created. Because the thing was, what we did is, for the first few spots, the reward was high. So whatever you spend on Jupiter, the reward had a like a 10%, 5%, 3, 2, 1. So everybody wanted to get into the first few spots. So it just created an inherent virality. And when you hear from your friend, let's say any friend of yours tells you, oh, there's a cool product coming out, boss, bro, you don't know about this, and then you join this. And so it just creates the trust angle also.
And there was no simultaneous inorganic marketing that
No,
went
no,
on.
we never did that. We never spent on that.
Okay. Thank
Our
you.
product was not out. We didn't know when it will be out.
Thank you so much.
There's UPI, which has captured significant portion of the market. There's credit card challenges whose business went down overnight because of the digital lending guidelines. And then there are neobanks, and then there's cash and CBDC. How do you see the space evolving, and what do you think are the key insights that you've either come across or validated that will help Jupiter win, or anybody else who you think will? I mean, it's not winner takes all market, definitely, because it's so large. But what are the top 2 or 3 insights that you have, and how do you see this game ending in the next 3 to 5 years?
So, frankly, I don't have a crystal ball, but I would say that the way I look at the market is that as far as the banking is concerned, it's here to stay. So I don't see that fundamentals getting changed. Like people will need to keep their money somewhere. People will need to trust some entity to deal with when it comes to financial services. So I think the mode of interacting with bank might change, or the underlying currency might change, but the trust will not change. And I think this is where I'm looking more at a fundamental play, saying that I have to be that entity. Now that entity, how a consumer wants to consume, let's leave it to consumer. So for you not to go out of the business, so if you look at it, I don't think we do fundamentally anything different. So like, what are we trying to do? We're trying to do a banking business. We are not saying that, oh, you put money with us and I'll double you in 2 days. We are not saying that magic, and we don't have that magic. So fundamentals remain same. Now, how the interaction of the money happens. So I think if it is evolving in the market, we'll also evolve with that. So like, I'll give you example. Account aggregator is a classic example. The account aggregator, when it came as a framework, I said to my team that we have to be the first to adopt it. Now there was a debate in the company that why should we? Because the Jupiter experience is so good in terms of categorization of expenses and this and that. And the team started debating that if we do that for other banks also, then effectively consumer has no reason to move to Jupiter. But I said, let's invert the problem. What does the consumer wants? Consumer wants all my bank accounts in one place. I can check balances. I can see all my spends at one. That's what consumer wants. And if you don't give that, you will get disrupted sooner or later. Somebody else will do that. Now, once you know that, you can actually influence how to move towards Jupiter. So I think these are the things. So like we know, right? One of the company were late to adopt UPI because they said I will push my offering to the market, and they got disrupted. So I think this is the thing which I keep telling my team, that let's never come in the way of changing consumer habits. If we try to change consumer habit, very difficult. And the tons of money might go behind, then also you don't know that it will work or not. So whatever consumer wants or is in consumer's favor, let's adopt that. I think that is the fundamental principle.
Great, thanks. Apurva, please. Yeah.
Slightly related question, but I think 2-3 years back when neobanks were just starting, right? A lot of the people in the market, investors included, thought that this is a good to have product, right? We were not sure, or the whole market or ecosystem was not sure whether it's a must have, and how will it evolve. And I think till now, I'm sure you're facing the same questions day in, day out as well. The question that I want to ask you as a founder or as an operating guy who's looking at this market day in, day out is, do you really see that switch has happened from for consumers, that this is a good to have and now it's a must have, right? And that's where a little bit of relation to Pramod's question also, whether what is the wallet share both in the mind as well as in the utility for that consumer of this particular neobank or any other neobanks in the market, right?
So I would say honestly, it has not reached must have. That is a hard reality. That being said, we measure our success in 2 ways. One, are the consumers taking their salary into this account? That is the one metric of measuring. Second, even though consumer is not taking his or her salary, what percentage of their spends they do through this account? Because that means it becomes top of their mind. So I think on the first thing, I think we are lagging like significantly. We are like insignificant right now. We have like 50K consumers maybe who take salaries into Jupiter account.
And that'll be what proportion of the overall customer
We
base?
have 2 million.
Okay.
So it's very less. But the second one, to my knowledge, I think there are almost like 400K consumers who use this as a primary spending account. Because like the average spend on those accounts is like $500 or $600 a month. And it's not a credit transaction, it's a debit transaction, which is a lot if you ask me. So I think that is, and when we have the ability to see their potential income, if not actual income, because when you open an account, you give literally everything. So I think from that standpoint, we can see that almost 80-90% of their spends happen through this account. So that's a good indicator in my view.
And any players you feel globally have crossed this barrier or this cliff yet?
Oh yeah, Nubank, who is one of our investors as well, 55-60% of their consumers have Nubank as a primary account. Like by the way, ICICI, HDFC and all of that also, that number is less than 25%, just to let you know. So it is not like 100% of ICICI consumers use ICICI as their primary account.
Oh wow, that's an interesting
Yeah.
Fact. I would not have assumed so to begin with, but yeah.
Sorry? No, it has not. See, what consumers do now is a very unique thing which we learned. So consumers, every consumer, smart consumer, has 2 to 3 bank accounts. So one account they use for salary taking in, one account they use for UPI transactions, one account they use for small savings, which they want to forget password also. Because they're saying if I know the password, I'll withdraw. So it's very unique. So by the way, we picked up that as a consumer behavior. We picked up that as in our product. So like when you open Jupiter account, then another parallel account also gets created, which we use for small savings. So and that account does not have the ATM card or the debit card. So you get only one debit card, but does not apply to that. That account is not discoverable on UPI. So you can't spend money through that. So we picked up those traits into the product as well.
So, sorry, somebody else?
Go ahead.
So one of the questions I had is that, see, this neobank concept, like if you large level, if you see, is that the non-brick and mortar mode, right? Like completely internet first. And some other banks already have gone into that mode in a bit, right? If you say Citibank today, right? Like, and that shows like why Citibank was bought by Axis. A large, very, very premium customer, nobody wants to visit the branch and nobody visits the branch also, right? And are you competing today with, because when we talk to some of the other banks, like a lot of the different banks are also thinking of a super app in some way, right? Like where they will do everything, they talk about engagement in their app, they are also understanding that a person visiting a branch is actually a lot more cost rather than doing everything online. So how is the trend looking like? How do you look at this, that okay, not all these other banks are also trying to, sort of at least the realization that okay, what doing as little operation to the branch as possible is more profitable for them, and they are gradually having this app. And classic example is SBI, if you see, right? Like their YONO is really a great case study, right? Like with respect to what they're trying to do. So how do you see the YONO banks, a neobank positioning between what it was 3 years back or 4 years back versus a neobank in the current context?
Sure.
when a lot more of the other banks are also trying to go digital as much as they want.
No, you're right. So again, I look at it from a market opportunity standpoint. So, so I tell you a real thing. So I started my career in 2003. I joined ICICI, worked there for 7+ years. And 2003, I specifically remember when I joined ICICI, the private banks all put together had market share of 1%. And the banks like SBI, BOB, PNB, Union Bank used to laugh at us, saying that boss branch का जो relationship होता है ना, ये सब लोग कहाँ टिक पाएंगे. That was the era. Now, private banks, just 5, 6 banks, have 30% market share. Even like bank like Kotak, which has 2.5% market share, is $100 billion worth. So I think today in India there are like 45 mainstream banks, and I actually buy your point. The 5 and 6 banks at least have realized this and have become conscious of it, and they'll make good effort and will get successful also in my view. But what happens to those 40? So the market shifting will happen. So these 5, 6 banks control today whatever 25, 27% market share. I'm saying I'm not looking to capture 10% market share. I need just 2, 3% market share in next 10 years to become very, very big entity. I think that is the only aspiration I have. So and that is like so big opportunity that we don't have to worry what other banks are doing. That being said, I'll also give reality check. Today, out of our 2 million consumers, which we have acquired in last 18 months, the 80% consumers are from these top 4 banks. So that's a hard reality. Despite that, I'm giving them benefit of doubt, saying that they will do a very good job in next 5 years, and they will like come back in my view. But other 40, I don't know.
Does that also mean that newer banks will actually move towards being banks themselves?
I think so. I hope so. No, today there is no guideline, right? So RBI doesn't allow effectively, right? So I'm saying that's why I hope so.
The only fact is that RBI is not like giving out licenses in that way.
I think it's a matter of time in my view. It's a matter of time.
I think worldwide regulators are considering open banking.
Well, they have like there are 10 or 12 regulators who have issued digital banking licenses. So I don't think so. It's an unheard of or an unbelievable phenomena. Maybe 3 years back it was unbelievable phenomena. Now no more. You know, I actually never believed in it, frankly. So I always, I must say, I'd come like this close by looking at all the volume traction and all, because like one friend of mine is an avid crypto investor, and he, in fact, since 2015, he has been putting half of his salary every month into the crypto world. And 2017 he pushed me, saying that boss, you should do it, buy this Binance coin, which I believe was a good decision in my view, because he was buying it like $1, $2, and he owns like almost 50-60 million dollar worth of Binance coin now, because he bought like lots at $1-2. So I opened the account in one of the Singapore exchange. And then I just like, when I was literally about to transfer the money, I'm like, oh, wait, I had decided I'll never gamble. Why I'm doing gambling? So I just didn't transfer the money. So, so I think that way, I feel there's no underlying asset. So a currency which has no underlying asset, I'm not sure. And a currency which is so volatile, how do you trust that currency? So I've stayed away personally. That's the only thing I would say. Uh, I have invested in a couple of companies who are into this business. I didn't know they're going to start this business. I invested in founders because earlier their business plan was different. Uh, though they pivoted after 2 years and they're very successful now. So I have some indirect exposure. They become like very good and large companies, but I have never asked them about their business.
Do we have any questions online? Archana, can you please check?
There's some.
Would you continue to focus on retail, or at some point would you start focusing on business? At that point, would you move from digital to hybrid banking experience?
So I think there's a lot of work to be done on the retail. Like today, our product suite, in my view, is not complete. So it will take at least 2 more years to have it completed, offering like all around consumer financial services. It will take 2 more years to build that out. But I think if we have visibility on the license whenever, then we would move towards businesses as well. Because then if you're a bank, then you have a social obligation, you have to go more broader in my view. So we'll have to do that. I mean, I don't know about this hybrid, maybe it will, actually I don't know much about SME business. So maybe that warrants that. So whatever is needed to do the business, I think we will take that approach. That's the way I would say.
Thank you. We have couple more questions. Fiat money is backed entirely by the full faith and trust in the government that issued it. Same boat as that of crypto. Okay, that's a comment. Globally, South American countries seem much more concentrated with respect to neobanks specifically. Do you see it the same way, and any particular reason?
I think the new bank and couple of banks in that country, and they're really focused on customers. They're really focused on, like new bank issued what, 60 million credit cards in a population of 250 million or 280 million, whatever the Brazil's population is. Before new bank, there were like only like 7-8 million credit cards. So and like their loss rates are lowest compared to other traditional banks. So I think it is about how to increase the coverage of the financial services products and how do you manage the economics of the product. So if you're able to do both well, yeah, you might see a situation. It will not be exactly similar because I think the Indian banks are good in my view. But yeah, you could still see very scaled play if you're able to do these both well.
Sure, thank you. Anything else from online? Anybody in Zoom if you have a question?
Just continuing on that thought, why do you think neobanks in Brazil are so successful, and which other countries do you think have similar kind of demographics or banking structures?
I think the key reason was the banks didn't take them seriously, the existing banks. So they got a free run for four years. So by the time they acquired over 10-15 million consumers, nobody took them seriously. And by the time people understood that they're becoming very big, it was too late. So that was like one key aspect. And second, their NPS, if you look at it, is the highest in the world, 85 for a consumer product. Not easy. So they spend zero money in new customer acquisition. So literally zero money. So all of their customer acquisition happens only by word of mouth. So the economics really make sense for them. So I think that is the real play. So the product market fit is so good because of the NPS and the word of mouth and the economics being set in that it's a very tough job to replicate. Very, very tough. So since they're one of our investors, we take literally like we have calls every fortnight with them to understand nuances, to understand processes, to understand how they leverage data science for customer service. So all of that we learn a lot. We're not there even like 1/10 of where they are in terms of processes.
Got it. It's a perfect storm, I guess, right? So for
Yeah.
them. What about UK? UK is one of the, I think countries which has the most liberal banking
Yeah.
regime for neobanks and a lot of neobanks as well. But
But it's working as well. So like Revolut or Monzo or Starling, they all are working. Yes, there were many failures as well, like Tide and there are a couple of more which failed. But Monument Bank and all of these are working well. So I think when you have like 10, 12, even the success rate is 50%, that's a pretty good success rate.
true, true, definitely. What about the US?
US, I don't know
It's a mix,
whether it's
right?
working well or not. I think like Varo is struggling, Chime is doing well. Uh, then others, I don't know. I think others also took saving-led approach. So where they took the spare change or investments into the stocks, mutual funds, then create a bank account on backs of that. So I've not heard that great a success story, but like South Korea, Kakao Bank, because of the Kakao chat. Then in Argentina, Uala, that's working really well. In like Philippines, Tonic, that's working really well. In Indonesia, Bank Jago, that's working really well. So there are good success examples as well.
Got it. Great. So I guess we are done. If anyone has any last questions, otherwise we'll wrap it up.
I just have one question, more from a talent perspective that you're attracting, right? I just want to understand what is it that you're doing in the market to attract great talent because you're building great product today, right? So what is it? How are you able to attract such people?
No, I think we have our own share of struggle, trust me. So, in fact, you'll be surprised. We struggled the most last year because we are conservative when it comes to hiring. So there are very few fundamental ways in which we offer to people. So we actually at a senior level or a mid level also, we don't hire people who are driven by cash salaries. So, and even though they are good candidates, we are okay to let go in terms of not having them on board. So we hire people who are really driven by creating a value through stock. And I think, and we see those biases. So what we do is, like I'm sure none of you are applying, but so we give like two offers to people. So one where there is a higher stock, lesser cash, and then there's the other offer is like zero stock, all cash, and then we see what person picks up, and they're like very subtle way of testing the person.
And then they don't get the joining date, I guess. The second.
No, it's not like. So we give both, but then we define the role accordingly. Where the criticality of the role of the person depends on what motivates the person. So I think this is the natural filter which happens in the company.
Very interesting. Thank you so much.
Yeah, I mean we need both, right? Yeah.
Great. Thank.
She has one.
That question. So, what do you think? Like, if someone chooses, say, the ESOP plan, and versus someone who chooses to get more of a fixed
Cash,
salary,
yeah.
what does it tell you about that candidate? Do you think that reflects on the candidate's work culture and career goals?
No, it's not about that. I think, so first of all, I will differentiate, right? At a mid or a junior level, cash is of course the driving force, right? Because they need for their basics. So, but more at a senior or slightly a level below senior, they're not struggling for basics. So the idea is that what is the motivation factor? How aligned are they to success of this company? And whether they believe in the vision of the company. See, a person who believes in the vision of the company, that cash never creates wealth. Hard reality is that. So even though your salary is 1 crore, you will end up spending. But your stock value will really create wealth if you cash out at one go. So I think this is where we see the person is believing that, oh, if I'm getting like say 50 lakh stock and it might become 5 crore and that is a wealth I want to own, the person motivation is very different.
How we handle it is we allow people to invest half of the bonus into stocks.
Okay, nice.
Well, thank you so much. Really appreciate it. Really a big round of applause for him.